You are not able to see the screen yet.
Now I can see.
Okay, so in the previous class, we have discussed about the format of financial statement. Okay,
Yes.
so I have explained some part of it, not all of it. So I have explained up to long-term borrowing, I think. Am I not audible to you, sir?
So
But when I'm asking question, like you're replying very late.
I think connection is slow. So last class we did the long-term provision.
Long-term provisions, okay. Okay, then there is other non-current liabilities or other long-term liabilities, you can say. So here it is, other long-term liabilities. In other long-term liabilities, we include items like which can be said as current liabilities, but for a longer time period. Like if you purchase any goods on credit basis, it is included in trade payable. It is included in trade payable, but uh, it is current liabilities. But if that trade payable is more than 12 months, is for more than 12 months, then it will be included in long-term non-current liabilities, and it will be called other long-term liabilities. So there are different type of this other long-term liabilities. Now, under current liabilities, the first item is short-term borrowing. Actually, the long-term borrowing and short-term borrowing both are same thing, but the timing is the main concept here. Like if it is for less than 12 months, then it is short-term borrowing. And if it is for more than 12 months, then it is long-term borrowing. After that, there is trade payable. Trade payable. Okay, so trade payable includes current. Yes, trade payable includes creditors and bills payable. When we say trade payables, it includes creditors and bills payable. And all the other items under current liabilities you can see here: short-term borrowing, bank overdraft, cash credit, short-term loans, deposit. So everything is almost same as long-term borrowing, but if it is for less than 12 months, then it is called short-term borrowing. You can see here debentures, bond, term loans, public deposit, other loan advances. Here also in short-term borrowing, we have short-term loans, deposits, other loan and advances. So these are short-term borrowing. Then short-term provision. So it is like in long-term provision, we have provision for like gratuity and provision for warranty and earned leave. So all these provision are for long term. Now here provision for tax, provision for expenses, and provision for employee benefit. Okay, so there are some employee benefit that we have to pay, and it is for short term. So these are short-term provisions, short-term borrowing, and then other current liabilities. So under other current liabilities, it is interest accrued but not due, interest accrued and due, income received in advance, current maturities of long-term debt, like long-term debt. Let's say that any liabilities we have to pay after 12 months. So if it is payable after 12 months, so it will be included in other other long-term liabilities. Now, in the next year, it will become less than 6 month, 2 month, or 3 month. In that case, it will become current liabilities. Let me explain that to you so that you'll understand. Let's say on 2016, March 31st, there is a liability payable after 18 months. Okay, on 31st March 2016. So at that time, it will be long-term liabilities. Yes or no?
Yes, sir.
Because it is for more than 12 months. Now, the same liability on March 31st, 2017, it will be liability payable after 6 months. Yes, because
Yes.
in 2016 it was 18 months. So now after 1 year, 12 months already passed. So 18 month minus 12 month, there is 6 month. So it will become current liabilities. So that is written here. Current maturities of long-term debts. Interest accrued means like we have to pay interest. It is already accrued, but not due. The month is not completed, so we don't have to pay it right now. Then interest accrued and due means month is completed, but yet we have not paid the interest amount. Income received in advance means the money we have received and work we have not performed. So that is money received, income received in advance. Unpaid dividend, calls in advance. All these are current, other current liabilities. Please write these.
Okay, sir. Yes.
Okay. So after this, there is non-current assets. Now we will again go to the format. So this part is complete. The first side of the balance sheet. I told you there are two sides. One is called equity and liabilities. The second is called. So total will be written here. And after that, we will start non-current, sorry, asset side. So under asset side, there will be non-current assets. Non-current assets. And under non-current assets, the first item is property, plant, and equipment. And intangible assets. So non-current assets and current assets. First of all, you have to understand the difference between these two. Non-current assets are assets where we have to like receive money after sale after 12 months. Like, let me explain that. There is non-current and current. So the basic difference between these two is less than 12 months. It will take less than 12 months to convert our current assets to cash. Non-current assets, it is used for long-term purpose. That is more than 12 months. More than 12 months. So non-current, it is for long-term purpose, that is more than 12 months. Current assets, it is for less than 12 months. Now there is a concept of operating cycle. Concept of operating cycle. So if your operating cycle is more than 12 months, then it will be considered for decision of current and non-current. Now, what does that mean? If operating cycle is more than 12 months, then it will be considered. So first of all, what is operating cycle? Operating cycle means when a business complete its whole process, like purchase of raw material, production of goods, sale of goods, and receipt of money. This complete process. Okay. After receipt of money, again it will purchase raw material. Okay. So this is the uh, operating cycle. If it is completed within 12 months, then there is no issue. You don't have to consider it. It doesn't matter. Okay, if it is less than 12 months. But if your operating cycle is more than 12 months, let's say 14 months, 15 months, 18 months, whatever it is, if it is more than 12 months, then operating cycle will be considered for decision of current and non-current, not 12 months. Okay, I'm explaining this once again. Generally, we have to consider 12 months for decision of current non-current. Means if it is less than 12 months, then current. If it is more than 12 months, then it is non-current. Is that clear?
Yes, sir.
Okay. Now, if the operating cycle is more than 12 months, that is, let's say 14 months. Okay. So if your operating cycle is more than 12 months, that is 14 months. So in that case, you have to consider operating cycle for decision making. Like if it is less than 14 months, then it is current. And if it is more than 14 months, then it is non-current. So now the situation will change. If any assets will be realized in 13 months, it will become current assets, not non-current. It is more than 12. So generally students get confused that it is more than 12 months, so it will be non-current. No. If operating cycle is more than 12 months, then we have to consider operating cycle for decision making. So it is 14 months. That's why 13-month asset will be current assets. Is that clear?
Yes.
Please write this.
Okay. Yes, sir. Yes, sir.
Okay. Now the non-current assets. So when we say non-current assets, if a company intends to use the asset for long-term purpose, that is more than 12 months or operating cycle, then it is non-current asset. And current assets, if the asset will be realized within 12 months, then it is current assets. Is that clear? Please write this.
Yes, sir. Yes, sir.
Okay. Now, under non-current assets, okay, these are, you can see non-current assets are classified in the following heads. So these are the headings we are going to write here in the non-current assets: property, plant and equipment, and intangible assets. So non-current investment, deferred tax assets, long-term loan and advances, these will be written. So property, plant, equipment, and intangible assets. Under this, the first item is property, plant and equipment. Property, plant and equipment. Then the second item is intangible assets. Then the third item is uh, capital work in progress. And then intangibles under development. Then item number B, it is non-current investment. Item number C, deferred tax assets. Item number D is long-term loan and advances. Actually, one is other non-current assets, yes. Long-term loan and advances. And then the last one is other non-current assets. So what are these items? Now, under property, plant and equipment, any assets that is used for business purpose for long term, like furniture, machine, building, land, all these items are included in property, plant and equipment. The second is intangible assets. Now, any item that is used and is intangible, like goodwill, patent, copyright, know-how, trademark, all these are intangible assets. Then capital work in progress, there are some assets which is long term in nature and still not completed. It is work in progress. So that is what called capital work in progress. The fourth item is intangibles under development, means like there are some software which is under development. There are some patent for which the item is not developed yet. It is not ready for sale. So all these assets will come under. So well, after that, there is non-current investment. So you can see there are different items: investment in property. Okay, one thing you have to remember, that if any building is in the business and building is used for business purpose, then it is property, plant and equipment. And if the building is purchased for capital appreciation, means after some time the price will increase and we will sell it for making profit. So that is called investment in property. So don't get confused. Okay, investment in equity share, investment in bond and debenture, mutual funds, etc. Long-term loan and advances, capital advances, security deposit, long-term advance to employee, long-term advance to supplier, all these will come under long-term loan and advances. So first write these under format and then one by one, all the items.
Okay.
Done.
Sir, almost. So can you scroll up for 1 second?
Yes.
Okay, fine.
Done.
Just a second. Yes, sir.
Okay. Now, these non-current investment and long-term loan analysis. Okay, I'm sharing a question now.
Sir, I'm just finishing. Sir, I'm writing the long-term loan and advances.
Okay.
Yes, sir.
Okay. So actually, one more part is left. After that, I will discuss a question. Hmm, Just one. Okay, after this, there is we have completed non-current assets. So under non-current assets, non-current investment means investment which is for long-term purpose. There is same item in the current assets also, like current investment. So there is no difference between non-current investment and current investment, only the timing difference. So if it is for more than 12 months, if you have invested in shares for more than 12 months, then it will be non-current assets. If you have invested in shares for less than 12 months, then it is current assets. Okay. Then there is also short-term loan and advances. Same thing, only timing difference. So let me write these items. The second is current assets. Current assets. So the current asset under this, the first one is uh, inventories. There are items, inventories, then, sorry, the sequence is incorrect. That's what I was thinking. Current investment. First is current investment, then inventories. Okay, let me explain all these, then I will write. So current investment, you can see here, current investment, I have already explained. It is same thing as non-current investment, only the timing difference. Inventories means inventory of uh, raw material, work in progress, finished goods, loose tools, like these things are included in inventories. So stock of these items. Then trade receivable means debtors, bills receivable, it is trade receivable. Cash and cash equivalent means cash, bank, marketable securities. Short-term loan and advances, same as long-term loan and advances. Other current assets. Under other current assets, there are like prepaid expenses, uh, accrued income that is not received yet. So all these comes under current assets. Okay, so current investment, then the B is inventories, C trade receivable, the fourth one is like cash and cash equivalent. Then short term loan and advances, and the last one is other current assets. After writing all these, we will calculate total, and total should be same. The both side total should be same, because assets is always equal to total of liabilities and capital. So please write this and then the remaining part.
Okay, sir. So this is under. So first one is non-current.
First one is non-current assets. Where?
Their second one is assets, right?
You have written all non-current assets. Yes.
Yeah.
So after that, you have to start from current assets.
So which is the middle one?
Middle one means
The one above. Yeah, this
these
BCD.
are under non-current assets.
Oh, sir, I thought the first one A itself was uh like each line was BCDE.
The first part is non-current assets. Under that, A, B, C, D, E.
Yes, sir, but in A like there's like it's like four lines more, so I thought each one of them was BCDE. That's why I wrote like that. So I made this mistake.
Correct it.
Okay, sir. Yes, sir.
Done.
Yes, sir.
This is current assets. Current assets have you completed?
The current assets, no, sir. Correct. Yes, sir.
Done. Completed.
Yes, sir.
So is there any doubt you have?
Sir, these ones, should I like just buy out them all or how?
Yes, you have to memorize it. The format actually, you have to memorize it. I cannot say that it needs to be understood because these line by line items you have to memorize. Otherwise, like they will ask question in this way that this item will go under which heading or subheading. So in that case, if you don't memorize it, it will not be like solved in the examination. So that will be difficult for you. So that's why please memorize all of them. Then we will discuss some of the questions so that you'll understand how it is to be written.
Yes, sir. Okay.
Okay, so that's all for today. We will discuss the statement of profit and loss in the previous.
So tomorrow is their class?